Welcome to Accounting High.
Three main benefits for using an efficient and effective tech stack. First and foremost, it's supposed to save you time. It doesn't always save you time, especially in the beginning, and it could be very frustrating getting these systems implemented and using them right.
Another benefit would be having more control. And so we'll get into bill pay, spend management, things like that, where you as the business owner don't need your hands in everything, but in order to exit that part of the business, you need some assurance that nobody's stealing from you. So part of what these tools do is allows us to work with the business owner and set up controls so that other people can spend money on the business's behalf.
And it just allows you to make better decisions.
Yep. And the last one is making better decisions. And so you'll see by the time we go through all of these, the end result is you've got a high functioning accounting department where data is served up to you in real time. And so you can start setting goals and tracking KPIs, and you can quickly get data served up to you so you can make quick decisions.
Clarity
and control. Exactly.
Clarity and control, two important C's.
Check out the Cash Flow Show. We discuss topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cash flow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the Cash Flow Show. The Cash Flow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. With Nikole and OKR.
All right. Class is in session today. What's up, Nix?
Hey, Scott. Good to see you.
So
You got the blue hat on today. It's very bright for you.
Yeah, I know. This was a prop for another episode. I was matching somebody else's colors, and then it spilled over into ours. So I played our intro for Juana, and she thought you should be singing it. Since I do all the rapping on all the other stuff, you should be singing this. So we may have to...
If you have like a really, really good technology that can override my really bad voice... Yeah.
Well, it's called auto-tune.
Yeah, auto-tune.
It's called auto-tune.
Like
We've got
really,
We've
really
got
strong auto-tune. I'm in.
That's what we use for my daughter when she sings. So stay tuned, listeners, because we may have a version of this where Nikole's singing it one day. But I hope y'all enjoyed that intro. Nikole worked very hard on creating it. It's great. Today's episode, we're on episode 6 of the Cash Flow Show. What is today's topic, Nikole?
Today's topic is building the ultimate accounting tech stack. So I think
something near and dear to both of our hearts. We met through the connection of an accounting tech stack tool, and we've been talking about them endlessly for the last 5 years. So
yeah. And so really this all came about with Xero, starting with building one of the first 100% cloud-based accounting apps. And then Intuit responded by creating QuickBooks Online, their online accounting product.
So really we have two general ledgers were at war early on in the cloud days. And you said Xero started from the cloud up. QuickBooks then pivoted and rebuilt their cloud product to be a great competitor. So there's QuickBooks Online and Xero, and those are the two core GLs that most accountants and small business owners use these days. There's others out there.
Right. There are others out there, but the reason we choose and work with these two is because most of them integrate with most of the business operations tools we will talk about today.
And you want a cloud tool that's going to communicate with others, play nice with others in the playground, because there's a lot of different apps that we're going to talk about today. There's a lot of different apps that we use at our firms and that our clients use, and they're all kind of stitched together on the outsides. With sometimes we use other tools to integrate them. Sometimes they're just built into each other and they integrate. You just sign into one from the other and it pulls data back and forth, but it's the communication of data from these tools that we're going to be.
Exactly. And so I like to think of Xero and QuickBooks Online as like the hub, and they really should be your source of truth. And typically when we have clients that come to us, they're in two camps, two buckets. We like talking about buckets. The
We're
first
going to flip the script on these buckets.
the first one is they're an older business and they are still on desktop tools. They're still cutting paper checks. Just everything is very manual. And so we have an opportunity to do what I would call a complete technology overhaul. So in that case, we may be implementing cloud-based accounting software, a bill pay software, sales tax software, a new payroll software, 401k provider, all of the systems. And we actually did that with a client over the summer, and it took us several months and it was painful, but we did it. And that was an example of like 50-year-old business that, again, just been doing things the same way. And then the second bucket is a more modern or newer business that they have started to adopt cloud tech and they're adding on different tools, but none of the tools are talking to each other, or they've tried to integrate them, but the data's messy because they're not accountants and they don't know how to map things properly.
You could be duplicating a lot of entries, or just things could be happening on the back end that you don't notice, that it could be creating more of a mess.
Right. And so, or you've got two different sources of truth. And again, it just goes back to, we want QuickBooks Online or Xero to be that source of truth for you.
And as we go through a lot of these tools, there are lots of options out there. So don't feel like what we're saying is the only way. These are just ways that work for us, the ways that we play around with a lot of the tools and we talk about them and we kind of know what works and what doesn't when you're building a tech stack. And when we say tech stack, also describe what that means to our students, to our listeners. What's a tech stack, Nikole?
So like I was saying, with QuickBooks Online or Xero being the hub, we're building apps on top of that we're sending data to and from the accounting software. So that could be a bill pay software, that could be time tracking, that could be inventory software, that could be payroll, that could be a bank. So all of these systems that are connected through API, really as accountants, like people use the term bookkeeper, and what's changed a lot in our industry is the type of work we're doing isn't so much data entry anymore, it's data management.
Ooh, okay. And we're managing all of these apps stacked up on top of each other. You said API. API is, now I forgot what that even means, but it's a way for the apps to communicate with each other, basically.
Exactly. And we're doing a lot of mapping between the systems so that unless you had an accounting background, you would probably mess up, because when we're sending data from one system into your accounting system, that when it hits your accounting system, it's affecting your financial statements. And so we want clean financial statements so you can make good decisions. Again, just gets back to that data management component.
Yeah. And the goal of this, there's three main benefits for using an efficient and effective tech stack. First and foremost, it's supposed to save you time. It doesn't always save you time, especially in the beginning, and it could be very frustrating getting these systems implemented and using them right. But in the end, they're intended to save you time. What are some of the other benefits, big benefits?
Yeah, so another benefit would be having more control. And so we'll get into bill pay, spend management, things like that, where you as the business owner don't need your hands in everything, but in order to exit that part of the business, you need some assurance that nobody's stealing from you. So part of what these tools do is allows us to work with the business owner and set up controls so that other people can spend money on the business's behalf.
And it just allows you to make better decisions.
Yep. And the last one is making better decisions. And so you'll see by the time we go through all of these, the end result is you've got a high functioning accounting department where data is served up to you in real time. And so you can start setting goals and tracking KPIs, and you can quickly get data served up to you so you can make quick decisions.
Clarity
And control. Exactly.
Clarity and control, two important C's. So let's talk about some of these apps. Last week's episode, we talked about payroll, and we touched on some of the applications you could use with payroll. We definitely mentioned Gusto and ADP, and there's others. Let's talk about what we're looking at with these payroll systems. What are some of the benefits, and what are some of the reasons why you're going to use that? What are some of the systems you should stay away from too?
So let's first just define the different types of payroll services and what you need to look for in them. So I like to think of it as like you have a full service payroll option or a self-service.
Or an after the fact service. You can also talk about, that's what I used to offer at our firm.
Hopefully there's nobody doing after the fact, which is basically manual payroll filings, right?
Yeah. If your accountant is still doing after the fact payroll, please come call us, because they should not be. That's where you're basically giving them some numbers and they're on the back end calculating all the taxes and making all the payments after the fact, after you've already paid your people.
Oh gosh. So yeah, there's all sorts of payroll service providers right now. Intuit, QuickBooks has their own embedded payroll in QuickBooks. We can get into that and why I highly don't recommend that. There's Paychex.
I don't think they would even recommend it either. Intuit knows their payroll system is horrible.
Yeah, it's horrible. We usually get people off
QuickBooks
that
payroll
away.
QuickBooks payroll is a form of after the fact, because sometimes it happens after the fact where people just think their payments are optional. So they'll come to us, business owner comes to us, they said, I got all my payroll set up in QuickBooks, been paying my people for 7 months now, and we look at it and no taxes have been paid. And some of these payroll taxes are due immediately. When you pay your people, they're due within 2 days of paying your people. That's a problem if you think payroll taxes are optional. These other systems are carried out with trust accounts where they're pulling all the taxes. So I'm jumping ahead, but just know that any system that's going to take out all the taxes and handle all the tax payments for you is saving you a monstrous amount of time.
I remember, probably like 8 years ago when we first started using Xero at my old firm, and Xero used to have the payroll module. They have since shut it down.
Yes.
They used to. But
these GLs aren't the best with payroll.
I remember I didn't know, I was managing somebody else who was responsible for doing the payroll, and we were doing it through Xero. And same situation where Xero would process the number that you're supposed to pay to the IRS and EDD, but we didn't know we were actually supposed to pay it. So we had this $100,000 liability due. It was not good. So anyway, those are the types of mistakes we want to avoid. We want a payroll provider that will take the money from your bank account and then remit it to the correct tax authorities.
And there's a lot of different tax authorities too.
There is, depending on the state. So let's just go through the difference between a full service and I would say, would you call Gusto self-service?
Gusto's full service. They're handling all the payments for you.
But they're not I would say Paychex, right? Paychex will actually, their team, an employee at Paychex will process payroll for you. Gusto is
hitting
you have
the
to process
button isn't that much when we're talking about if they have to go in and report all their hours or report all the time and everything to Paychex, they're still going to have to report it in Gusto. They're just going to do it both ways. You're doing it up until the point where somebody is responsible for clicking submit. And you can have a company that does that, which, like you said, Paychex, or even if you worked with us, if you worked with Nikole, we're going to submit. I don't know if you do that, but we're going to submit the payroll for you and everything. So it's almost like we said in our payroll episode, you have a scapegoat. You have somebody you can point the finger at if something's wrong with the paychecks, so your employees aren't coming to you and you don't get stressed out about those issues. So you've got a scapegoat when you have a full service processor. You can say, oh, the payroll guys screwed up. Let me go wag my finger at them.
Right. But I think with a Gusto, right, usually our clients are hiring us to manage Gusto, and ultimately we're accountable for making sure things are correct. Yep. Versus,
you can manage Gusto yourself. People come to us and they're already using it on their own.
Right. Versus something like a Paychex is accountable for managing. The business owner is just giving them the data to put in their payroll information, and they're ultimately accountable. But we wouldn't manage Paychex on behalf of a client. That's correct. Just the difference I'm trying to explain there. So if you use something like Gusto, you can definitely do it yourself, but just know that you'll probably screw it up. So you may need a little bit of, and so this is where outsourced accounting, the services that we offer have become I remember when I first started Momentum Accounting, I wanted nothing to do with payroll. And then until Gusto came out, and then it was like, okay, this is something now. It's nice because we have control. And the nice thing about Gusto is it pushes payroll data into Xero and QBO very nicely. So that ties into our reporting reconciliation. So it makes our job doing the accounting much easier. And that's another reason why we like it.
And that's the way, I think that's a key difference in this Paychex versus Gusto. So Paychex is a company that's handling the payroll for you, and you can basically access your reports and review all the information. You can integrate it into your systems, but it's a standalone thing, like a company that you're integrating to. You're integrating those reports in. Gusto is sort of like an application that you're going in and you're connecting in real time. You're logging in and you're mapping the connection there. Paychecks, you're just kind of like reporting and they're giving you the data. So I see that as a difference where Gusto really is a tool, an application, a cloud tool. And then you got a lot of these companies that are processors processing it for you and giving you the data after.
Yeah, it's almost like outsourcing your payroll to a third, like another company. Yeah, so that's what we like Gusto a lot. It's also another thing we look for is great support, and that's really important. That's where that Intuit QBO payroll lacks, right? If we need to, we have an issue, it's really difficult to get a hold of somebody.
Yeah.
And then,
but at the end of the day, like the app itself is handling the check or handling the taxes or not. If the app is not handling your taxes and you're somewhat responsible for that, where you should really seek help and go somewhere for that, just so you don't have to get tied to making those tax payments.
right.
So I think we've, what was the last part of payroll?
Oh, just one last thing of why we like Gusto is also the entire like employee onboarding process. It's all automated. You don't have to get paper forms. It's all done through Gusto. So the employee, you send them an email and they can onboard electronically. And then
as with Rippling is another one too that does that.
Yep. We like Rippling too. So, and then the last thing is just, we talked about last show too, is integrated benefits. So you want your 401k and your health insurance, everything to talk to your payroll system.
Yeah, for sure. Dope. So along with taxes, we were talking about payroll taxes. There are other taxes that you may be still responsible for paying. You may be doing this yourself as a business owner. You may have your accountant handling this, but it's sales tax. And there are apps for that now too. So another trust tax. Well, I'll explain what sales tax is. Hopefully our listeners know. Sales tax, you're collecting it. It's a trust tax. You're collecting it on behalf of the state when you collect payments. If you're selling physical goods or software or other things that are required sales tax, most states are different. So each state, they are entrusting you to collect that from the customer. And then you in turn have to pay that either every 2 weeks or once a month, typically. Pay it to your state. So go ahead, go with your story.
Exactly. No, and the challenge is becoming more and more common as we get more and more online businesses, is when you're selling in multiple states, every state has a different threshold on when you need to start filing in that, collecting taxes and filing in that state. So some states could be $1, some could be $100,000, some could be based on units. And so it's really difficult to track that. And a lot of e-commerce businesses, when they start up, don't know about it and they miss it. And it can become a huge issue, especially if you go to sell your business. If you have this huge liability, it can really kill a deal. So we want to make sure that we have our system set up so you're not stuck with this huge tax liability that you didn't collect from your customers.
So what that's called is Nexus. I'm acting as the professor here today. So Nexus is that range of, are you required or not to file sales tax? Do you have to file it? Do you have Nexus in that location? It's tricky. So these tools have all the information you need to tell you if you need to file sales tax or not. Some of these tools are built into Xero. Books might have a tool too for sales tax, but two big ones that have been around for a good amount of time now, Avalara and TaxJar. Yep. Both great for sales tax tools. Both are amazing, pretty easy to use too. You know, once you get in there, their interfaces are great. I've used them both. I've heard good things about them both. We have clients that use them both. But yeah, what's your experience with using these sales tax tools?
Yeah, our teams also use both. I think our team likes TaxJar better for whatever reason. But yeah, both I think are better than doing it manually.
I got to represent Avalara. They have a home base in Durham, North Carolina. And I always see their big building near me. So shout out to Avalara. but they're both out there. They've been
Yeah.
around for a while. Avalara, I think, is a bit more corporate or bigger than TaxJar, but either way, they're both doing a good job.
They're both lifesavers for sure. And then a newer one that's come on the market is Anrock, and they specialize in sales tax for SaaS companies.
Oh, cool. Yeah, that's another tricky one because it's fairly new that SaaS is even being taxed.
A lot of people don't even
They
do
don't
anything
even
with
charge
sales
it.
tax.
Yeah.
Yeah.
And then it comes out of your pocket in the end of the day. So if you were supposed to be collecting sales tax, you get audited from your state and they determine for the last 5 years you were not collecting sales tax. Well, now you have to pay it out of your sales, out of your pocket. So that's the whole thing about sales taxes. It's not optional. We've had people get caught that didn't know. Sometimes it's like delivery fees or some optional thing that they think is not, and then they just weren't collecting on it. That's going to really cut into your cash flow. It's going to really cut into your profit. So if you're not doing it right, you're going to pay in the end. And they always figure it out. They always find out. We see the most audits of anything in our practice is sales tax audits, sales tax and unemployment, because it's the people trying to skirt the rules, trying to keep people off payroll. And then they figure out, oh, wow, all these employees were supposed to be. So as with payroll and sales tax are the biggest burdens on cash flow. And this is the reason people go out of business. It's the reason why restaurants closed down, because they weren't doing their sales tax right, or they weren't paying their withholding. So you see a restaurant that you love and everything seems to be going well, and all of a sudden they get a sales tax audit, and now they're out of business the next day, and you thought that was a profitable, great restaurant that you used to attend.
You'll get in even more trouble if you collect the sales tax but then don't pay it in, because that's like,
oh, that's the worst fraud.
That's fraud at that point.
Like, not knowing is one thing, or claiming you didn't know and not collecting it, that's one thing. But it's also like withholding from your employees, holding the taxes for them and not paying that. That's also fraud. You'll get knocked for that pretty hard. So find an Anrock so you don't get knocked if you're a SaaS company. But let's talk about other types of apps. Have anything else to say about sales tax?
No, I think nobody likes sales tax, so we can move on.
Nobody likes sales tax. Not even the auditors that are dealing with it like sales tax. This is the pain of their existence. They just want to get their pension and go. Employee spend. Expense management apps.
Okay, so I like this topic a lot because there's a lot of different ways we can do it, and we can save a lot of time. So as you're running a business and your business grows, you add on employees, you're going to get into a situation where you want to allow your employees to spend company money on your behalf. And so we want to make sure that we're setting up controls so they can't go crazy and spend all your money, but also balance that with not creating this huge administrative burden where people are submitting expense reports and receipts and then all the admin that goes along with that. So there are basically like 3 workflows of allowing employees to spend company money. So the first workflow would be the employee uses their own credit card to go out and buy something, take a client out to lunch, buy office supplies, etc. And then you, the employer, has to process an expense reimbursement. So this would be like the most manual, or I would say admin heavy workflow, because usually the employee has to submit an expense report. The employer has to reimburse them, and these all get reconciled. So there's just a lot of steps there. The second workflow would be you give the employee a company credit card like an Amex or something, and then they can go spend company money on that. But they still have to submit an expense report of sorts or receipts. However, you don't have to do the additional step of reimbursing them. And then the third workflow would be you use an all-in-one solution where you issue a card that comes with an app with the receipt management. So like, for example, the ones we're familiar with and recommend are Divvy or Ramp. And so you actually get a card from Divvy, issued by Divvy or Ramp. And this would replace your American Express card. You'd get a card from them. And it comes with an app and a software where you can submit receipts that the employee can easily match the receipts to the spend.
So that's your favorite solution. Divvy and Ramp.
That would be our favorite solution because it's the most streamlined. And what I like about Divvy and Ramp too is you can set up virtual cards. It also allows more granularity in data. So for example, we have a client that is expanding into different locations. And so he's going to have a branch manager at each location. The branch manager is going to be compensated based on the performance of that location. So from an accounting standpoint, how do we know if an expense needs to be allocated to location A, B, or C? So we recommended the owner check out Divvy or Ramp. He ended up going with Ramp because the benefits made more sense for him. And so now each branch manager was going to have a separate card. And then we've set up locations in QuickBooks Online. And so now we're going to be able to run a P&L by location. And it all comes, that's the back end system that we need to set up, the workflow we need to set up in order to give the business owner that data.
That's pretty smooth.
It's cool. And you can also set up virtual cards too. And virtual cards would be like, you don't actually get a physical card, you just get a number. So if you want to set up a card for different subscriptions, there's all sorts of stuff that you can do.
Oh, that's awesome. It's an easy way to manage subscriptions too.
Yeah, easy way to manage subscriptions, or like any way you want to slice your data. Like sometimes, like on the first episode, right, we talked about COGS versus overhead costs. Sometimes we'll tell a business owner, only use this card for COGS spend, only use this card for overhead, so that from our accounting team, we know where to categorize that. The downside to a solution like Divvy or Ramp is the credit limit that you get is based on cash in the bank. So these solutions only work for companies that have cash in the bank.
That's just so that it's easy for them to collect if they need to. They know that's insured, basically.
Right. And so you're just kind of continually paying down the line with your cash in the bank. Whereas, so like if we go back to option 2, which is you get like an Amex or something, and then, so that would be a better solution for a company that's tight on cash, where they can't, maybe they don't qualify for a Divvy or Ramp.
This is the cash flow show. We should make sure that you have enough cash flow in order to use these tools. So if these tools sound appealing, let's get you to the point where you have enough cash to use a Divvy or a Ramp.
Yeah, that would be ideal. And clients with inventory and stuff like that, they're typically they're always in a crunch. In those situations where they're using a different card, you might use some sort of receipt capture tool. So like Soho Expenses, Expensify, Dext, HubDoc, Xero and QuickBooks Online also have a receipt capture tool, but they do have their limitations.
Yeah, there's a lot of receipt capture tools these days, but it's just something that somebody has to use. So you have to embed systems and make sure people have the habit of doing that. Otherwise, you can implement this all day, and if you need your team to use it and they don't use it, then
that's a really good point. And that's one thing we always push back, because sometimes clients will be like, we want to implement this. And it's like, okay, who at your company is going to be accountable for making sure people upload their receipts, they tag the correct category. And so we'll push that off and push back on that until they really have somebody that can own it. Because to your point, again, we're implementing something that nobody's like utilizing correctly, and then it just creates more havoc.
It's all about having an accountability person or a champion to set up these systems. So any of these new systems that we're talking about, just know it's going to take a lot of time before you start seeing any time savings in the beginning.
And if you're outsourcing your accounting, you can't expect them to do that, because like from an outsourcing perspective, we don't want to be talking to your employees. We don't want to be talking to your customers. Maybe we'll talk to your vendors, but employees and customers, we want you to own that relationship. It creates, like, think about it. If we have 100 clients.
Well, we're not in the HR department.
We're not, but just think about, like, from a point of contact perspective, we can't have that many people that we're corresponding with. So we want to consolidate it to one point of contact at the client. And then that client, whether that's the operations or HR director, whoever is the one managing the employees and keeping them accountable.
All right, let's talk about invoicing, getting paid. Everybody needs to get paid. This is the cash flow show. We got to talk about making money. So
that's right. Yeah. Invoicing. Well, as we all know, getting paid is essential for cash flow. And there are tools that we can use to try to get paid faster. and tools that will allow us to get our invoices out quicker.
Can we talk about Ignition too? That's the one that I use. I think that's a terrific tool for any professional type services. Ignition's for everybody.
Right. Yeah. So okay. So one of the biggest mistakes I see is that we've got our accounting software and then we've got another system that we're sending invoices out of. And those tools are not sending data back and forth, or they're not doing it properly.
For sure.
So then you've got an AR aging report in this third-party system, which is, maybe it's a great billing system and it's got, a payment processor in it and it's easier for your customers to pay. Like I've seen people do this with FreshBooks because they have a good payment system. And then they're using QuickBooks Online for their bank reconciliation. And so that can just get you into a lot of trouble because the point of the bank reconciliation being done in QuickBooks is to make sure that if a client pays you, it actually gets reconciled to your bank account and it gets deposited. You need your invoicing, your payment processor, and your accounting software all to talk.
And if you don't have that, it is a nightmare. We deal with this with a lot of e-commerce systems that don't talk to the accounting data. And then the source of truth is somewhere else. And if it's not the same source of truth, then you're in a mess at the end of the year when you're trying to reconcile sales tax, and other fees that may have been coming out of those systems. So it's very important that you connect to one of these, especially for e-commerce. There's a ton of tools out there now for e-commerce businesses to use that'll pull the data into the GL cleanly. So everybody's got the same source of truth. And that's what really matters, is bridging all of these tools together.
Yeah. And even that's sometimes challenging because the data aggregator doesn't always send it in there properly. So the e-commerce is about as complicated as it gets when it comes to like reconciling all these, where all the data is coming from with all the different payment processors and shipping and e-commerce store and all
It's
that.
so complex because you've got sales tax in there too. So you want to make sure that tool is also speaking to it. It's, unless it's built in, it is a nightmare. And if you're dealing with that, then God bless you. I hope you have a good accountant and a good system for your e-commerce payments, receiving and making sure it all, because that's what we can advise you on, is the numbers. And if those numbers aren't right on the GL or on your reports, then nothing matters. If the sales is overstated because you included all of the sales tax in that and the fees that got taken out later, then we're looking at a higher profit margin than it really is. So none of that stuff is accurate. This is the importance of some of these tools for the first part.
Right. So that'd be like more point of sale. And then let's just talk about invoicing for a minute. So if you are tracking time, one of the biggest like stalls in getting cash in the door could be you're using a time tracking system, and whoever is putting together the invoicing is the super manual process. So maybe it takes them 2 weeks to put together the invoices and then send them out. And so we've got like, it's extending your cash flow cycle, and we want to shorten that. So we want to get the invoices out as quickly as possible. Like if you're invoicing for the prior month and you're billing hourly, the first of the month, like closest to the first of the month that we can send out those invoices. If we're not getting paid up front, which we know where we stand on that, we want to get paid up front. We don't like hourly.
That's the philosophy. Yeah.
But we work with lots of clients still where they do bill by time and materials.
Reference our Getting Paid episode 2 to learn more about making sure you get paid on time. And that's where we dig into a lot of the philosophy behind a lot of this. So just having a way to get paid easy. Take credit cards too. That's something that some people don't do. They accept checks, and that makes payment time increased. That's your cash flow cycle. So
right, we'll get into that. We'll get into that in a minute, but let's just go through from the very beginning. So
sure,
if you're using a time tracking software, like all of our clients like Harvest as one, and so what Harvest does is it shoots data into your invoices.
On time.
All your invoices. The time gets entered by the employees. It gets approved, and then it shoots over to QuickBooks Online or Xero, the invoice, and then that can be sent out. I can't remember if the invoice comes out of Harvest or the accounting software, but basically those two systems should match and they're integrated. And then you've also got data you may have employees that are paid hourly. So we want the time tracking data related to that to be pushed in automatically into the payroll software so that you're not doing data entry in two different places based on your time.
This is where all the wires start to cross in your app stack.
This is where one of the most complex.
Like yeah.
And then on top of that, we're also like, okay, we want to know, maybe we want to do revenue on our profit and loss statement by different service line. And so our time tracking software needs to map to our P&L in such a way that we're getting useful information. And that's one big thing too, because someone over here is setting up all the codes and the time tracking software, and then we're over here in accounting and we're not talking to each other. If you're working with a good accounting team, they'll be able to have that conversation with whoever's managing the time tracking software and make sure that like things are mapped properly.
Very, very important.
And then getting into payment processors. So let's just talk about the difference between Intuit and Xero and the native payment processors there.
What, inside QuickBooks and inside Xero? Yeah.
Yeah. So Xero has their own payment processor. You have to like log into another area. So it's technically separate from QuickBooks Online, but the backend's like pretty clunky. But the nice thing is you can sign up for QuickBooks Online. You can turn on ACH or credit card and start getting paid right away. That's the advantage.
So in the beginning you said Xero. You meant QuickBooks Online has their built-in payment processor.
Yes, QuickBooks Online has their own payment processor. Xero does.
That's what most small businesses use. Anytime somebody requests payment from me, anybody I work with, they're all using QuickBooks payments. It's the easiest way.
Yeah, it's the easiest way when you're setting up QuickBooks Online. Now, Xero, I think Xero's is actually, so Xero has integrations with third-party tools, Stripe, PayPal, GoCarless, among others. But I actually think that Xero's payment, like getting paid over Xero, is slicker than, like, if you log on.
The interface is cleaner from the user's perspective.
Yeah. And like the QuickBooks payments, if you ever log on your QuickBooks Online, you'll see like all these errors. And what we don't like about that is, again, it comes back to accountability. Who's responsible if a payment bounces to fix that? Do we go alert the client about that because we see this, or, the client's the one that took the payment from the customer. They need to go talk to the customer and let them know, hey, your credit card bounced. I need a new credit card or whatever it is. And that's like a little bit can be an issue, because what happens is there's the undeposited fund account on your QuickBooks Online.
Oh, yes.
And the payment bounces, and then that grows, and then nobody goes and follows up. This happens while clients come on and we're like, dude, you had like $10,000 of payment that bounced 2 years ago that nobody followed up with a customer. So we're just going to write it off at this point. Payment processors are not a set it and forget it.
I had this happen to me with one of the apps that we use. As my card, it didn't bounce, but they thought it was collected but my card expired. So it never actually collected. And they approached me a year and a half later and told me I owed them $14,000.
No way. What? Yeah. Oh my God. Did you pay it?
Yeah, I paid it.
Oh, what a guy.
Yeah, I know. I almost could have said, you know what, we'll just use something else. But no, it's a good tool. But yeah, that happens. How did that impact their cash flow for that time period? Right? That's the real importance of having systems like this, especially as things get a little bit out of control for SaaS company. As you grow, things are not always in your purview. You want to have clean systems in there that you can avoid these problems.
Yeah. And like I was just saying right now, is that setting up a payment processor is not a set it and forget it. Somebody on your team needs to be accountable for managing the payment processor. And there was a while where we were doing GoCarless implementation for clients because we use GoCarless. And then we pulled back from that because when we set it up, then the client thought that we were managing it, but really it's, they sell the contract, and then at what point does it become we're responsible for it? So anyway, it's just being really clear about who's responsible there.
Yeah. Accountability matters, especially when it comes to getting paid.
Yeah. And we need to get away from, like what you were saying before, stop taking checks. I mean, there are rare cases like my boyfriend, he's a general contractor. He gets paid by check when he goes and he's at the site, like on site anyway. And so that's not a big deal. But for the most part, the admin of dealing with a check is so time intensive.
Okay, can we talk about the psychological reward of a check? Because
that's true.
I love getting checks in the mail.
That's
I love
true.
cashing them. It makes me feel like I'm making money, regardless of what it is. When I see a check in the mail and it's $500, $1,000, I'm like, hell yeah. It doesn't feel as good if it just keeps happening in the background, you know? So if an occasional check comes in, you know, don't burn it. Don't send it back.
Okay.
Still cash it.
This is true. So maybe the people that don't want to give up checks like the satisfaction of seeing that money come in.
Okay, can I tell a
have
check
heard that
story? Can I tell a check story? So I got a message from Venmo today, $100 from Dad because I didn't cash my birthday check.
My mom literally Venmoed me money today for my birthday. I was like dodging her for 2 weeks. So what do you, and I'm like, I'm busy. I don't need money, Mom. Like, she's like, well, I'm going to get you something. She's like every day bugging me about it. And I get a Venmo this morning for my birthday.
Both of our parents sent us Venmos today for our birthdays. How thoughtful. Mine was just 2 months later. So, all right. So, yeah. Checks are, if you got to cash them, though, you got to make sure you cash them. Now I want to go find this check that I didn't cash. I'll cash that too. I'll double up.
Well, I think it's funny that like our parents are still definitely balancing their checkbook. If I send a check, there's no way I'm going
definitely.
back.
He knows that check wasn't cashed. Yeah. So it's a mindset, though. This is important to know. As a business owner, you've been doing it one way forever. It might be harder to change your ways than it is to save the time or any of those things. I can empathize with that. When we're doing something and we're established and it works, somebody comes around and says, we got a better way. Well, yeah, but then I got to change my ways. And so I'm empathizing with all of our listeners that are resistant to make any of these changes. Just know that once you hit the pain, and the pain is so powerful that you can't avoid it, you're going to have to change. So be prepared and get ready for some of these changes. Because if you're not doing it that way now, the next generation will when you sell your business, and then it's going to make it harder for you to sell and harder to transition. So if you start to graduate to some of these more automated tools, you know, and if we're all this far in the episode and you have to hear that from me now, then that's also a problem. So hopefully anybody that's 45 minutes in knows that we're ready to make this change, or they're in the process of doing that. So
Yeah.
let's talk about bill pay then.
Bill pay. Okay. So we did an episode about bill pay. So if you want to know why you need bill pay, go back and watch that. But bill pay is like the lowest hanging fruit of opportunity that we can help clients with to create a big change for them if they're not on a bill pay software and they have a lot of bills to pay.
That would be episode 4, your listener reference.
And so let's just talk about real briefly, recap why we need bill pay. Usually what happens, start your business, you're the owner, you'll have like a couple bills that come in. And so you're like, yeah, just use Scott at Pageant, send me the bill there. And then what happens is your business grows and you've got more and more vendors, you got more and more bills, and everyone's still like sending you the bill, or they're sending somebody else on your team who bought the service a bill. So step 1 is we want all the bills to be routed to one place. So typically we're setting consolidation. So we're setting up like an accounting at abccompany.com inbox. And then we go to the vendors and say, hey, vendor, stop using Scott's email address, send them all here. So we're organizing. So here's the problem though. So if you're not using a bill pay software, so we use bill.com or Bill now for most of our clients. There are other options that we'll get into. If you do not have an electronic bill pay system set up, what happens is somebody on your team is going to have to pay that bill. And then by the time it gets to accounting, all we're seeing is that bank transaction leave the bank, or that credit card transaction. And we're like, then we have to go back and say, hey, Scott, what was this $10,000 payment you made? What was it for? Who was it to? So the advantage of having a streamlined bill pay system is the bookkeeper processes your bills all in one batch. Let's say we go on once a week. We enter the vendor name. We request a W-9 if we need one. We're choosing the right date. So we're choosing the right period in which the expense was incurred, which bleeds into your financial statements. And so the workflow is we're setting everything up for you. Then you as the business owner to come in once a week, see all the bills that need to be paid, and then you can choose which ones you want to pay based on due date, based on vendor priority, et cetera. So it just creates a lot of more organization and gives you more control over when cash is leaving your bank.
Cash flow. All that sounds good. What are some of the tools that you can use? Are we ready to talk about some of the tools?
Yeah. So we talked about bill.com. Another one that we will sometime use for if someone has, like under 5 bills a month or something, we'll recommend Relay for that. And I like Relay because you can upload. So the workflow for Relay. So with bill.com, the bills get routed directly into bill.com first and then push into QBO or Xero. With Relay, you actually upload the bill to QBO or Xero first, and then that pushes into Relay for payment.
It's a two-way sync.
Yeah. And then there's an approval workflow. I didn't talk about the approval workflow, but we want an approval workflow too so that people aren't stealing from you.
Right. Another cash flow issue. You got somebody stealing from you, that's going to impact your bottom line.
And then Ramp has a bill pay feature, which I'm talking to a prospect right now that uses it. So we haven't actually used the bill pay module within Ramp. So we'll see how that goes. And then bill.com actually acquired Divvy a couple of years ago and they're consolidating. So we're seeing like this whole spend management stuff get consolidated between the bill pay and the card spend management.
Yeah, and that's going to happen across the board. A lot of these tech stacks are going to shrink, and hopefully, there's the consolidation happens smoothly, because it's one thing to invest all your time into working with this company. They get bought out or something, and something changes. Sometimes it's a good thing. Sometimes it just means that now you have to spend all this time integrating into a new system or a different system. That's where having a partner in this technology system implementation would be good.
Yeah, I'm curious where you stand on that point, Scott. One thing that happens, clients come to us with apps, and then we as a firm have to decide, are we willing to learn this new app? Or do we say, if you want to work with us, you have to use the tools that we're experts in? And that's always, there are situations where I'm like, oh, I'm interested in learning about this app. I've heard good things about it. We're willing, versus some we're like, we know that one sucks. Like, absolutely not. We won't use it. So there's a little bit of gray area there. And I know some firms are like hard and fast. We'll only use this for efficiency purposes, where some might be more willing to take whatever the client's using. Where do you stand on that?
Yeah. So that's why our firm is fully blue and we're just using Xero, because we don't even let them continue using their own system. And so that's typically the case with tools that we're tasks and services that we're offering, the things that we're going to be doing. We're going to use our toolkit 100%, because it's just a tool. It's just a tool in the toolbox. Some are different colors. You go to the store, you got a blue hammer and a red hammer. Well, we're using the blue one for this thing. And they both hammers, they both work. That's how we describe it to the client. And if it's something that they're doing, let's say it's a POS system, it's their invoicing or whatever, then we work around that, because that is important. We want them to get paid. So if they're using this tool to get paid, we are not going to dictate that they use anything. Whatever they use to get paid is fine. And we're going to make sure it fits into our system. And if they don't have an integration with Xero, then we're doing manual entries. And we're still doing that for a lot of clients that are using something that aren't even. So we're actually reinforcing whatever they're doing to get paid, because that's important. And then we on the back end make sure it works, it fits in. So I'm sort of a hybrid of what you're preaching here.
Oh yeah, we used to be like convert everybody to Xero except for those same thing where like if they're already using the invoicing in QuickBooks Online, or they've already got bill.com set up, it's integrated to QBO, and that's a huge migration to try to like switch everything up. So if somebody's using the invoicing in QuickBooks Online and the payment processor, are you still moving them over to Xero? And if you are, what invoicing solution or payment solution are you setting up for them?
They are still using QuickBooks, and we
Really?
just pull the income data into Xero. Yeah.
Okay. Interesting.
That is what's happening.
Wow. So that was exactly what I just advised against, was having two different systems, one for invoicing and one for reconciliation.
I know. I am in favor now, and I have been for the past maybe year, that we start bleeding a little bit green. And any client that's using that, we start using QuickBooks. We didn't want a context shift between two GLs. Within our system, within our back end, we want to use the same color all day. We don't want to have to switch from green to blue. And that makes sense for us as a firm. But for a business, what I'm suggesting out here in the wild is different, because our firm is already working one way, and I haven't even put in the effort to say, okay, now we're going to use two tools. So we've already built something one way, we're not going to change it. And so that's why I'm doing it that way. But I think for anybody that's now in the process of they're able to make a change, you should have everything in one system. It's clean. If you have the ability to do that, we would suggest that. I think we're actually taking on clients in QuickBooks now at our firm, but any client that's already being done one way, that's how it's being done.
Yeah. And I think that's a good example for our listeners to understand the difference between the type of work we do and the purposes that you use. So you're helping clients reconcile their books to file a tax return. And there's a certain point where a business will outgrow the need. A lot of your clients that work with you, we would not be a good fit for. We'd be too much. So they're right in the right spot with you guys.
Or they're tax compliant.
Yeah. Then what we do at Momentum is more of operational accounting. We're implementing all these tools for you. We're working with it's kind of like a spider, right? We're working with other areas of or an octopus rather, of your organization. And
they both have 8 legs, right?
Yeah. So I think that's a good differentiator between when you need a firm like Momentum versus when you need a firm like yours. And again, both are good solutions. It just depends on what stage of the business you're in.
That pretty much sums it up too. How about other industry specific software? Do we want to touch on that?
Yeah. So just what I was talking about there. So if you were to go to Xero's or QuickBooks App Store, this is the ecosystem in all of the apps that have an integration with Xero or QuickBooks Online. So examples could be an inventory system, project tracking system, construction. If you're like a service company, like a Service Titan or auto repair shop, all of these, whatever industry you're in, there's some sort of operational tool that you're using probably with your customer to track service or parts or whatever. And what I recommend is choosing a tool that integrates with your accounting software in some way, or it doesn't necessarily need to. For example, we've got clients in inventory systems where we're just doing a month-end journal because it's actually too messy to try to integrate it. But at least having that conversation with your accounting team and have them help you make the decision on what tool you use.
I agree there. I mean, on my side, I'm telling them, use the best tool for your business. And because we don't work with one type of business, all of them are different. How about online banks? We've touched on, we referenced Relay as a bill pay option. But Relay is an online bank for your banking tool as well.
Right. So the great thing about
accountants love Relay.
We do love Relay, and we love it because for a business, if they want to just start up a business right away, they don't have to go down to a bank. They can just go online and have a bank set up in 10 minutes.
That's not why we like it. It's one of the reasons, but
that's convenient for them.
Yeah. It's convenient for us. The reporting is super slick. The integration's super slick. It gives you good data in the GL, and it's easy for us to do our job. That's why we love it. Yeah,
because we have a lot of issues. I mean, the best quote I heard somebody say is that banks are the Great Wall of China for bookkeeping, and it's so true. It kills our margins when we have crappy banks. And business owners will complain about their bank for 5 years every day, but for some reason they won't switch over. So I think Relay is a good bridge if you want to get onto a different, most of your operations onto something else, but still have that brick and mortar bank. You can start to move things over, open a Relay account, start to move things over time, have both accounts, but then get to the point where your brick and mortar account is limited in terms of how you're using it.
Yeah, for sure.
And then Mercury is another one that I see them a lot at tech conference and stuff, but they haven't been super in the accounting community. And I'll be interested to see it if they see the opportunity there.
Yeah. They're a new player on the scene. They threw a little party at QuickBooks
Connect, they did.
So
There you go.
That's how I know of them is, and that's these banks, they're marketing everywhere and they're just trying to get the word out. So I've not had no experience with them, but they seem slick. I like their logo.
I would say that the cons with some of these online banks are that there's typically not lending options. So you may still want to have a physical bank, create a relationship with a banker if you are looking to get a line of credit or some sort of lending.
And reporting.
Okay, so now that we've got your AP, your AR, your transactions book, your operations tied in, your payroll pushing in, we have what's left, where we're going to wrap it all up in a bow and then present with you how your business is doing. So that's reporting. And you've got your basic reports that you can pull out of QuickBooks Online or Xero. And then if you want to do any deeper data analysis of that, you might take it into Excel or Google Sheets and do some calculations to calculate your margins or like your marketing spend as a percentage of revenue, whatever sort of calculations you might be doing. You can do that in Google Sheets or Excel, or there is another tool that I love and use, and I know you love, Scotty, called Reach Reporting. And Reach pulls in or connects to your Xero and QuickBooks Online. It pulls in all your financial data. You can also hook it up to Gusto if you want to look at your employee data. But basically, think of any formula that you would do in Excel with your accounting data. You can automate that in Reach and visualize it. And you can also do like budgeting and forecasting in there. It's a very powerful tool.
And it's very slick. The looks of it just looks pretty. You can set up all your colors are very clean and prominent, and whatever you want to do, it's going to look good too. So that's what I love about Reach. It's super clean. And if you have somebody that's managing all of that data, like a Momentum, they will set up your Reach tools and reporting for you. So you just get to look at the pretty reports each month.
Yeah. But it's funny. A lot of people, they want that reporting and they don't realize that all of those things we just talked about need to be put in place before. And then the end result.
Oh, yeah. Your reports are meaningless if you don't have good systems in place.
Exactly. I kind of like describe it as like baking a cake versus frosting it. It's like the reporting is like the frosting on the cake.
Yeah. So let's bake our cake first. That was great. It was great. This is a lot. Yeah. This is a lot to take in for anybody in one sitting, but I appreciate y'all listening to this. This is all important stuff to build the right tech stack. This is near and dear to our hearts. This is things that we've been working with and we know about for the last, like I said, 5, 7 years. Oof, more than that. It's probably been about 10 years now that we've been working in this space.
But it's crazy because new apps pop up every day. And for us running firms, we get apps brought to us every day by clients. And we have to make these decisions on whether we use them or we don't, or what's, constantly testing out best in class tools. And we're among our peers. So we get feedback from what's best in class from our peers.
Yeah.
So these are tried and true tools that like our industry as a whole backs and
heavily
recommend.
Vetted. Let's just say we didn't just pull these. We don't have any of this. None of these are sponsoring. So it's not like we have any invested interest either to be representing them. These are tools that we know, the work that we use at our firms. And yeah, thanks, Nikole.
Thanks,
Scott. Any closing remarks?
Yeah, just choose wisely when you choose tools, because as soon as you start onboarding employees, customers, vendors onto the tools, you're kind of stuck with them. So do your due diligence. Talk to an expert.
Now, if you're watching this on YouTube, please like and subscribe if you made it all the way here. If you're listening, leave us a review somewhere too and share it with your other business owner friends.
Yeah, I'd love to hear what topics you have enjoyed or you would like us to talk about too.
Yeah, so comment on that and come find us on LinkedIn and we can help you out. Thanks a lot. This is the Cash Flow Show. Thanks, Nix.
See you, Scott.
Yeah. So you're drowning in cash flow issues. You run a business, but feel like it's running you. Customers won't pay, but you got bills due. It appears you won't have enough for payroll coming up soon. It seems like like you're running nowhere fast. You work hard but never able to withdraw cash from the business. You get more customers, hire more employees, but still take home hardly anything. You feel like you're on a hamster wheel, frustrated cause the battle's always uphill. Even though you got a bookkeeper on your team, they send you reports but you don't really know what they mean. Your CPA doesn't understand a thing about your business, at least that's how it seems. But if you want to get above water and grow, check out the Cash Flow Show. This is the Cash Flow Show, where we help the small business gain momentum and become profitable. This is the Cash Flow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cash Flow Show. Discuss topics like getting paid on time, profitability, and managing your bottom line, payroll best practices, the best apps to use, and cash flow forecasting tools. So if you're a small business owner, your help's right around the corner. Fret not. Tune in as Scott and Nikole help you reach your goals on the Cash Flow Show. The Cash Flow Show, where we help the small business gain momentum and become profitable. This is the Cash Flow Show. Listen and learn. We'll show you how to pay yourself on what your business earns. Cash Flow Show. Our advice will take you far. Cash Flow Show. Tune in with Nikole and OKR.